Paralysis of analysis. You can get over, if you get bombarded with too much stuff. Number one is just be aware. Okay, be aware of what's going on. Follow what's happening here. Listen to the garbage, honestly, that is being spewed out from the mainstream media and the numbers that they're throwing at us. And we know for the most part, all these numbers are fake. Look around you. Look, how are people doing that you actually know? Is everyone thriving? Is everyone doing fantastic? That's a big part of it, is using, like I said, using your own intellect. Where I think people, if just by immersing themselves in a particular environment, for example, for me, all right, I'm up here, I'm following the markets all the time, watching the flow of cash like we were just talking about. What is that telling me? If I see cash moving in a particular way, okay, this tells me there's something pushing it there. Obviously, we know the main driver here remains the Federal Reserve, and they're going to continue doing this despite a taper or not here. But you can look at the numbers that the government is giving us, and it's all garbage, and realizing that the numbers they're letting us know about are probably vastly worse than they actually are. And that's another thing here with regard to a lot of the data that we get. For example, we're in earnings season now. We're going to hear from the banks this week. They're starting to report. None of that even matters anymore when you have the main driver of the market being the Fed. So we trade the environment. Look at the data; it's very important. Okay, but watching the flow of cash. Where is it moving? And you can tell this again, looking at action in the debt market, looking at the credit market. What do I mean? Are banks lending money to people? Are banks lending money to each other? What's going on with regard to businesses? Are they getting loans here? That's a big part of it too. So right now we have credit flowing, we have debt flowing. This is an environment very conducive to a stock market that's more than likely going to hit new record highs relatively soon. Once we get through this rough patch, these last 2 months have been historically rough on the market. Okay, we haven't really done too much in a while in this market. And I think once we get through this end of this month here, and there's a lot of people calling for a crash this month, one guy in particular, I'm not mentioning his name. Once we get through this month, I think the market's going to start moving higher, faster. Even if the Fed, does a token taper, what are they going to do? Their goal is to buy assets. That's their end game here. And they have minimum targets every month as to what they're going to buy. So what are they going to do? Raise these targets, lower these targets, mess around with numbers. And this is just what they're letting us know they're doing here. They could say whatever they want to, but watching how cash is moving through the markets is the key. All right, where's it going? And understanding where it's going, and it's very simple to see. Look at, like I said, the debt market, credit market, stock market itself. Main driver here is obviously the debt market. We can have a very, very good idea as to where the markets are going to go until they stop. And we're going to get a big key or big clue when we see, let's see the 10-year yield spiking. And it's going to happen. It's going to happen. I just don't know when, and I don't care when. So we just got to keep our eye on it. That's it.